often when we talk to Michael McCarthy, he quite likes it when we see this little bit of consolidation. I mean, what have you made of it?
I think healthy consolidation today, because we have seen a fantastic performance by the Australian market in 2012. We've already seen a performance of 4% by the market, every single sector trading higher except for healthcare, which is the only area that has been down. And in the top 200 stocks, 175 stocks managing gains in 2012. In fact, if we have a look at some of the best performers for the year to date so far, they've been the worst performers of 2011. White Energy up by a massive 39% this year. That's compared to a loss of 89% in 2011. Dart Energy up by 31% compared to a loss of 68% last year. And Link Energy up by 29% compared to a loss of 58% last year. In fact, if you take the top 10 worst performers in 2011, they would have been up 15% in the year to date so far. That's compared to the 10 best of 2011, which has only managed a gain of 6.5%. But I think the most impressive thing about today's action is the volume going through the market. This is the first time in 2012 that we've managed to crack that $4 billion trader mark. So $4.3 billion worth of stock going through the market. And of course, today was all about the material space. The production reports coming through from BHP Billiton, Oz Minerals, and Lynas upping its resource, so having a fantastic day there as well.
Range bound, albeit a rather broad range. And do you expect us to remain there for some time?
We are still range bound. The upper end of that limit is at 4,350 points, but I guess that 4,200 point mark more relevant for the shorter term traders. So if you are looking at the intraday graphs, and if we do go to the 30-day chart, this is what the Australian market looks like. You can see that we do have a strong level, support level over the 30 days at that 4,050 point mark. But you can see, if I can just draw a line at just where we have seen some recent resistance, and that's the 4,200 point line. You can see that 3 times there we've hit it. We're now past that point. So I guess that gives a mark for some of the shorter term traders to set their losses at around the 4,200 point mark, hoping for another move up. But altogether, some healthy consolidation going on. Hopefully we will be able to stay above the 4,200 point mark, but it is a very short term technical target, and I guess longer term we're still range bound between around about 4,000 to 4,350 or 4,360 points.
Well, we kind of know this is going to happen. We've been talking about it now for quite a number of months.
No new information here, but I guess the message coming through has been prepare for the worst but hope for the best. So coming out and cutting our global growth targets for both this year as well as next year, 2.5% for this year, 3.1% for next year. That's down from 3.6%. I guess if we break it down region by region, the US has been cut to 2.2% growth from 2.9% previously. Japan down to 1.9% from 2.6%. China, though, remains unchanged at 8.4%, and India, a big cut there, down to 6.5% from 8.6%. But it's interesting, Morgan Stanley came out with a report today as well, talking about the probability of muddle through versus a bear versus bull scenario from the European situation and the US situation. And they put a 37% probability on a muddle through scenario. And in particular, if you have a look at the European situation, they put a 60% probability on a muddle through. In Europe, they put a 25% probability on a bear case scenario, and a 15% probability on a bull case scenario. So 15% bull and 25% bear. So it's interesting to see some of the probability being priced in, I guess, on expectations of what happens in Europe. And the big thing to be watching is Greece. We know that D-Day is in March. The restructuring talks resume today, and the market's really hoping not to see a disorderly default of Greece.
More strength for the Aussie dollar against the likes of the US dollar and against the sterling. You'd have to assume there must be some strength still against the euro. I suppose if we do have that Portuguese debt auction tonight, will be telling.
The trend is your friend until it ends, and great news for anyone wanting to travel to London. And I guess if you have a look at the impact in terms of the markets, the US dollar has been really the focus of the market in 2011 and the weakness there, and it's been a great opportunity for Australian companies to go shopping in the US. But now with the pound and the euro under pressure and at multi-decade or all-time lows, it's an opportunity for Australian companies perhaps to look at expanding in the European region or in Britain as well. So So looking for opportunities there because of the currency movements. We have seen some very volatile and sharp movements, but for the time being, the Aussie dollar holding up very well in 2012. So great news for Australian companies which are looking to acquire offshore assets. Not so good if you're looking at exporting at the moment, because of course that high Aussie dollar does eat into profits from companies making revenue offshore. And I guess the one sector that really comes to mind when you consider offshore revenues is the healthcare space. A lot of exposure to the currency movements, and that's the only sector in 2012 which has managed to see a decline.
All right, guys.